In this video, I want to talk to you briefly about what the profit and loss is. The profit and loss is also known as the income statement, and it's really just a summary of the income and the expenses for a given period of time. Let me show you what it looks like in QuickBooks. On the left-hand side, we're going to click on Reports, and then we're going to click on the text Profit and Loss. When I look at the profit and loss, I can see I have various income, I have some cost of goods sold, I have some expenses, and I have a net income on the bottom. There's a couple of things that I want to point out. We're going to start with the net income. We don't have $34,000 in the bank. The net income represents the net income for this period of time. Our bank balance represents the running balance from the beginning of time. Over here, when I look at the income, I can see I have $39,000 worth of income. I can see I have these various categories where the income gets logged. One of the things that I have is track rental income. I know that in my business, I sell track rental in 30-minute increments. I also have training income. I know in my business, I sell race car training in increments of 2 hours, 4 hours, and 8 hours. When I look at the track rental income, I know that all it is just when I picked 30-minute track rental and sold that to somebody. But when I look at training income, I don't know how much of this training income is 2 hours, 4 hours, and 6 hours, but that's okay because there's a different place to get that detail. What I like about the profit and loss is it's a nice summary. I can just see at a glance how are things going for a given date. So at the top, I've got my income. In the middle, I have my cost of goods. My cost of goods is the money that I spent to buy the thing that I sold to my customer. So in this example, I have $2,500. If I click on it, I can see what's happening behind the scenes. I can see that I spent money at Candy RS. So let me go back to the report summary and talk to you about what this really means. I spent $2,500 at the candy store. So that I could then sell that candy to my clients, I sold the candy to my clients for $4,000. It cost me $2,000 to buy the candy I sold. The cost of the goods or the cost of the candy I sold was $2,500. If I take my $4,000 minus my $25,000, that's going to give me a net income. But really, to get my net income, I'm adding all the things I sold minus all the cost of the things I've sold minus all my expenses. When I go a little further down from cost of goods sold, I have gross profit. So my gross profit for this business is $36,000. What that means is I had to spend $2,500 in order to collect this $4,000. So after I take into account all the money I had to spend in order to make my sales, this is how much money my business has for gross profit. Now I have my expenses. Some of these expenses are going to be fixed. Maybe I have rent expense. That just is what it is. Some expenses I can kind of fiddle with, like I can buy more and less office supplies. Once I record all my expenses, the number I have left is my net income or my net profit. So gross and net. Any of these numbers, you can click on the number and see what's happening behind the scenes. Any of these things, if you said like to see more, you can click on that too. If you're ever Googling this, the term that you're looking for is drill down. When you click on them, what you're doing is you're drilling down within the report.